Welcome back to Keystone Property Advisors. Every day, you're bombarded with real estate headlines. Housing market heats up. Interest rates surge. Prices poised to drop. But here's a critical truth many overlook. Simply knowing what is happening isn't enough. The real challenge and the greatest opportunity lies in understanding what this means for you. The vast majority of buyers and investors consume news without truly translating it into their personal circumstances, their financial goals, or their specific property ambition. This fundamental gap between general market data and individual strategy is where many make their most costly mistakes. So, how do you bridge that gap? How do you move from passive observer to strategic decision maker? That's what we're breaking down today. The problem starts with the sheer volume of generic real estate advice. Whether it's a national housing market forecast or a sweeping statement about a good time to buy, this information rarely considers your unique situation. For a first-time homebuyer, a general warning about a cooling market might lead them to delay, potentially missing out on stability or a favorable entry point in their specific micro-market. For an experienced property investor, broad advice about high rental yields could obscure the unique risks and operational costs of a particular property type or neighborhood they're considering. People relocate, upsize, downsize, or become landlords based on general sentiment, only to discover their personal outcomes diverge significantly from the broad narrative. The hidden problem is that without translation, market data becomes noise, leading to analysis paralysis, or worse, reactive decisions that don't serve your long-term wealth goals. Experienced real estate investors and savvy homebuyers operate with a distinct mindset. They are translators. They understand that market forces don't apply uniformly. A surge in interest rates, for instance, has a different meaning for someone with a large cash down payment versus someone who needs to maximize leverage. It means something different to a seller in a highly desirable supply-constrained urban market compared to a seller in a sprawling suburban area with ample new construction. The underlying principle here is acknowledging that all real estate is local and all personal finance is individual. Poor property decisions often stem from a failure to bridge the gap between global or national trends and their specific, localized impact on one's personal balance sheet, risk tolerance, and life stage. True strategic advantage comes from understanding this translation. To make smarter, more profitable property decisions, you need a structured approach to translate market signal. Here's a simple, four-step framework. Observe, analyze, personalize, act. First, observe. Identify the specific real estate trend, economic indicator, or policy change. Is it rising interest rates, new zoning laws, a significant increase in local job growth? Be clear on the OHATWI. Second, analyze. Understand the mechanics of this observation. What are the direct and indirect consequences? Rising rates directly increase borrowing costs and indirectly reduce buyer purchasing power. New zoning might increase future supply. Increased job growth often means higher demand. Understand the why and how. Third, personalizing. This is the crucial step. How does this trend intersect with your specific financial situation, your property goals, your timeline, and your local market? Are you a first-time buyer saving for a down payment, an investor seeking cash flow, a homeowner looking to refinance, a seller looking to upgrade? What does this mean for your unique circumstances? Finally, EACT. Based on your personalized understanding, develop a tailored strategy. This isn't about guessing. It's about making an informed move that aligns with your specific objectives. Let's apply this framework to a common scenario. Rising interest rates. Observe. The central bank announces a series of interest rate hikes over the next 12 months. Analyze. Higher rates mean increased monthly mortgage payments. reduced borrowing capacity for some buyers, and potentially a slight cooling effect on property appreciation in certain segments. However, inflation might also be a factor, making real assets more attractive over the long term. Personalize. For a first-time home buyer with a pre-approval. This means their purchasing power might diminish, or their target property budget needs to be adjusted. It could also mean less competition in some areas, creating a different type of opportunity. For a rental property investor, higher rates impact financing for new acquisitions, potentially shifting focus to properties that can absorb higher debt service through strong rental income, or looking for sellers feeling pressure from increased holding costs. Existing landlords might see a rise in demand for rentals if homeownership becomes less accessible. For a homeowner looking to refinance, it means their window for lower rates has likely closed, and they might need to focus on other wealth-building strategies like paying down principal faster or investing elsewhere. Buying the act. The first-time buyer might target slightly smaller properties or adjust their down payment strategy. The investor might refine their cash flow analysis, widen their search area, or negotiate harder on price. The homeowner focuses on optimizing their current equity. The ability to translate what this means for you is not just about making one smart decision. It's about building a resilient and adaptive long-term wealth-building strategy through real estate. When you can accurately gauge how market shifts impact your personal portfolio, you gain several advantages. You can proactively mitigate risks, such as adjusting your cash reserves or diversifying your property types. You can identify and seize opportunities that others, stuck in generic narratives, might miss. This strategic agility leads to stronger property appreciation over time, optimized rental income and cash flow, intelligent use of leverage for equity growth, and ultimately, a more robust and stable financial future. It's about building a portfolio that can weather various market cycles because your decisions are grounded in your reality, not just headlines. Don't let valuable real estate information remain abstract. Your path to wealth in real estate isn't about predicting the future. It's about understanding the present implications for your unique circumstances. Every market update, every economic indicator, every policy change, ask yourself, what does this truly mean for me? Apply the observe, analyze, personalize, act framework consistently. This isn't just about buying or selling. It's about making smarter property decisions at every stage, building genuine, long-term wealth, and navigating the housing market with confidence and strategic insight. Thank you for joining us at Keystone Property Advisors. Make every decision count.